Are you looking to grow revenues, increase profitability, or obtain financing? If so, you came to the right place.
Running a business is all about leadership. How do you become a better leader? Learn from the successful entrepreneurs and business owners how to lead your organization more effectively. That's why we created Leadership Live at 8:05, Talking Small Business, to help you succeed with your host, Andrew Frazier, Business Growth Pro and CFO and founder of the Small Business Pro University. Every Tuesday evening at 8 p.m. Eastern, we're joined by experienced entrepreneurs and business owners who share their secrets to success via Livestream. Also, every Friday morning, we release a new podcast episode. Either way, you will learn about developing your business leadership skills from our roster of highly performing guest experts. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbprou.com.
Good evening. Welcome to Leadership Live at 8:05. I'm your host, Andrew Frazier, and excited to be back here with you once again, talking small business. Each week, we have a great guest on where we chat about different key topics that could be valuable for entrepreneurs and business owners. You know, working with so many entrepreneurs and business owners over the years, one of the things that I've found is, the key to being successful is becoming a great leader. Leading your business forward is the key to success. So that's why we do this live stream and podcast, because many small business owners need access to ways that they can develop their leadership, get greater exposure, so that they can run their business better, make better decisions, and be more successful. So that's really what today is all about. That's what I'm committed to. That's what my guests are committed to. And we hope that you take valuable information and insights away from what we're doing. That being said, we invite you to, definitely feel free to ask questions, post comments in the chat. We'll try and get to them. This is really for you. So take advantage of the opportunity. We've got a great guest here this evening. Our guest is Myriam Cruz, and she's going to be talking about finances and making finance easier for your business. And that's what every small business owner pretty much needs help with and guidance. So we've got an expert here. She's done business financing. She's been a loan officer. She's worked with businesses in terms of training and development. Currently in her business, she actually works directly with small business owners, and she is a small business owner and helps guide them through the business financing process, but also helps them get their business financing and records keeping and reporting up to speed, so that they can have the information they need to run their business better. So very excited to have Myriam here. I've known her for several years through different organizations and different things that she's been doing. And she's always been tremendous and outspoken leader for small businesses and their success. So Myriam, welcome to Leadership Live at 8:05. Excited to have you here this evening.
Hi, Andrew. Thank you so much for the invitation. For me, it's a pleasure to be here tonight and be able to have a conversation about what affects a small business and its access to capital, and why it's important for them to put their financials in order to obtain the financing that they need.
Okay, great. So yeah, we're going to dig into that because access to capital is always a challenge for small business owners, but there's things you can do to increase your likelihood of obtaining financing. And at the end of the day, the things that you do to increase your likelihood of financing, it does that because it helps you be a better business person and run your business better. So you also get the result of growing revenues and increasing profits. And that's what it's really all about. Wouldn't you say, Myriam?
Yes, yes. I think when you start a business, sometimes you do have a plan and you know where you want to, what your vision is, but sometimes you just start a business because you have a passion and you don't have a plan. But eventually, if you don't plan correctly, it gets out of hand and you might end up being out of business in no time. And sometimes to save a business, planning for success is the key to be successful.
Yep. Yep. As they always say, failing to plan is planning to fail. So
Right.
nobody thinks they're planning to fail, but if you don't have a plan, you're actually doing it. So, so that being said, I told you a little bit about Myriam, but she's, done some amazing things, doing some great things, and I can't do her justice. So I'm going to let her talk to you about where she's from, a little bit about her journey and how she got to where she is, what she does, and why. So go ahead.
So I immigrated to the United States in 2001 from Ecuador. Back home, I had an accounting degree and I also had business school experience. I went to college and I studied business and I specialized in marketing and human resources. When I came to the US, obviously, like everybody else, I had to work very hard to get to be somewhere. And my first job were, a waitress, and eventually I was able to learn the language, and I started working at a bank. And for 18 years, I worked in a banking and started as a teller, and I worked my way up. And majority of my experience was in commercial lending, SBA lending, and that was what I did for a big part of my career. I help business owners to obtain financing. I help business owners to purchase commercial real estate. And I was able to work with business owners on identifying the things that they were doing wrong, that were kind of closing their doors to obtaining financing. And having the accounting expertise obviously helped me to understand financials and helped me to identify things that they were not doing properly, and also started learning about how important the credit history is and how you need to build good credit and get good credit reports. So kind of like everything that I done in my life ties with one thing and the other. Banking was definitely a big stepping stone in my career. It gave me a lot of knowledge. It put me in front of business owners that I never really thought about, helping. And eventually I start having that passion of helping business owners and seeing them being successful. And when I did SBA financing, it opened up my eyes to see how people start from scratch a business, they grow it, and eventually they expand. So it piqued my interest, and at some point I was like, I want to be one of those business owners. I want to be, I want to have a business. I want to be able to grow my business. I want to have employees, and I'm working on that plan now. So there's a 5-year plan. I have 2 years on it, but I gotta say, it's not easy. You fall, you make mistakes, and then you readjust and you keep going. And it's been a very interesting journey. And the fact that I'm able to help with my experience and my knowledge business owners to secure financing, that's for me a win for me, because I'm actually doing what I'm passionate about, and win for business owners because they're able to obtain the financing that they're looking for.
Okay. So it's great. Thanks, Myriam, for introducing yourself, telling a little bit about your journey, what you're doing. It's great that you're passionate about what you do and really care about the people you work with. but also you mentioned something key that, even though you have a lot of experience, you have your own business and it's not easy.
No.
So you can appreciate what they're going through firsthand, which is valuable. And just, so as a business owner, if it's hard and challenging, that's the way it's supposed to be. And that's part of the, fun of having a business, because you're always learning, you're always doing things. So definitely that just gives additional perspective. So, so great. So, one thing that we wanted to talk about was business financing and financial management, and they go hand in hand. But Myriam, can you tell people a little bit about what really is financial management? Because on a certain level, people hear that and say, okay, yeah, I know what that means, but they really don't. So can you give a little bit of,
Yes. So I think starting from my own experience, I seen business owners that started a business and didn't have enough money saved to make it through their first year or 2 years, where you hardly make any money to break even. And it starts from the putting a plan in place where you save money and you put money on the side when you're gonna start your business. And that way, when you actually start running your business, if you're not generating money immediately, then you have money saved that you can use to survive until you start actually generating income. It starts from the fact that you need to start separating your business income from your personal income, because many people start using their personal accounts, or they start using your business accounts like they were their personal accounts, and they commingle transactions from their personal and business expenses. It starts from creating or start like the foundation to establish business credit, and then keeping the right controls in place to be able to identify how the business is doing, and if they need to readjust the way they're managing their business. So there's a lot of things that you need to start working on, as far as like the right steps when you open up a business, setting up that business account, start separating your business income, paying your vendors the right way, establishing business credit, putting an accounting system in place, being able to generate monthly reports, knowing how to read them, work with a CFO, work with the right accountant. It entails a lot of a team that you need to work with to be able to manage your finances the right way. So that's a starting point for any business. And like I said, being in banking and seeing business owners constantly overdrawn in their bank account, and because they were not managing their money the right way, or because they just kept checks in their wallet and they didn't deposit them because they didn't have the time to do it, or just not invoicing their clients after the service their clients. So there were a lot of things that I experienced myself when I was in banking that I saw business owners doing. And those are the things that no one really has a conversation with them about basic stuff, finances 101. And that's a conversation that a lot of times when you see someone starting a business, someone should have with a counselor. And as you know, there's a lot of tools and resources available for small businesses that they're not taking advantage of.
Okay, great. Yeah, no, definitely. That's key. So Myriam, we're gonna take a break in a minute, but what we want to do is we'll come back and after the break and talk about why many businesses don't deserve financing. So we've got a top 10 reasons why your business may not deserve financing, and we're going to talk to you about how you can improve upon that situation, unless you really want to stay in that situation, which you probably don't. So This show is brought to you by the Small Business Pro University, and we're just going to learn a little bit about it. And right after that, I'll be back with Myriam, and we're going to be talking about why your business may not deserve financing. Do you own your business, or does it own you? Is your business growing, and are you making enough money? As a business owner, there are so many things you need to know to become more successful. Hello, my name is Andrew Frazier, the Business Growth Pro and CFO. I created the Small Business Pro University for you. Small Business Pro University has self-paced, dynamic, multimedia learning experiences created by more than 20 instructors who are business owners just like you. Small Business Pro University will empower you to become a masterpreneur by learning the secrets to creating a successful enterprise, to go from working in your business to working on your business. Take advantage of our strategic coaching program, or just simply choose the courses that you need at www.sbprou.com. We will empower you to thrive and not just survive, and make more money in any business environment. Welcome back. 805. Here with Myriam Cruz, and really talking about business financial management, business financing. And what we're going to start off with is the top 10 reasons why your business may not deserve financing. So number one on the list is you're not willing or able to invest in your own business. You want us to have you run into that before, Myriam?
Yes. I think I will say like 60% of the time I do get questions about, I want to open up a business, and, you start having a conversation about, so what kind of business do you want to open? And okay, so do you know how much money is it going to cost you? And they're like, oh, I don't know, maybe $100,000. Okay, so how much money do you have? And they're like, oh, I don't have any money. So, and then you're kind of like, you nicely have a conversation. Well, if you want to start a business, you need to work on a business plan. You need to prepare a budget and know exactly what you need, counting, from the pen that you're going to need to the office supplies, any equipment and furniture. And once you have a total of what the amount will be, then you have to put at least, and this is, for a startup business, like 15 or 20% down, depending of if they're going to be doing SBA financing, for example. And I know that right now they're more flexible. They're doing like 10%, but they still need to put money out of pocket. They have to show that they're invested in their business, that they believe that the business is going to be successful. If they don't believe in their idea, no one else is going to do. And a bank, unfortunately, yes, we are just a number. And unless you can show you numbers, like I know there's a show that says, show me the money, they're not going to show the money.
Yeah.
So,
okay.
Yeah, it's important that they, once you have an idea, and if you're really serious about the idea and you're passionate about starting a business, then start planning and have a conversation with people like you that can guide them in the right direction.
Okay, so yeah, at the end of the day, you've got to be your first and most important investor. And if you're not willing to do that, then you shouldn't be going in business. And not only that, if you're not able to do that, you probably shouldn't be going into business, and you should be going to work to save some money, or do your business part-time and save some money, because it's very tough to be successful in business without money. So,
and I have to agree with that statement.
Yeah, and the other thing is we see that too often, and a lot of times people are lied to, in that the people say, "Oh, you can get a grant to start your business. Oh, they'll give you money to start your business. You're a veteran; they give veterans all kinds of money to start your business." I've yet to see that. You probably as well.
Yes, and that was going to be the next my next point. When I people think that there are grants to start a business, and they usually don't have an idea about what is a for profit and not for profit. And I had conversations with people that said, like, well, when I open up a non for profit, I need to get a grant. I'm like, okay, so what kind of business are you opening? They're like, oh, I'm going to sell clothing. And I'm like, okay, so are you going to be making a profit? They're like, yeah. So what are you going to do with the profits? Oh, it's to pay myself. I'm like, then you're not for profit.
Right.
So you are generating a profit. It would be different if you're giving those proceeds to a foundation or something like that, but you're not. So having the people do have, I guess, the wrong information
Mm-hmm.
about how to access capital and the type of capital is available there for a small business. And they, it's because of a friend told them, but they need to really get to the right resource to get information.
Okay. Yeah, no, definitely. That's 100%. So, really, you have to invest in your business. So that's number one. Number two is a lack of business or industry experience. How often do you run into that, Myriam?
A lot. Examples of that will be restaurants. Everybody seems to want to own a restaurant. And they're like, oh, well, my mom is a good cook. And I'm like, okay, so what kind of experience does your mom have? Does she ever work in a restaurant? Does she ever manage people? No. Okay, so what is your experience? And they're like, oh, I just work in, like driving a taxi. I'm like, okay, so there's really no experience related to the business that you want to get into. So at that point, if there's someone that has a dream and they, I call them dreamers, but they don't really have a plan of action, it's very hard to kind of like guide them in the right direction because they don't allow anybody to help them. But for people that might have a good idea and they actually serious about opening a business, there's other, resources. And the conversation will be different as far as like, oh yes, I don't have the experience, but I have the money and I have manage people. So maybe you can direct those people into franchising, like get into a franchise, hire someone that has the background experience in the industry. So that's the type of counseling that you can give to someone that actually has the planning, the plan of action, and they have the money saved, and they have the management experience that can transfer to what they wanted to do. And and they can probably do the business that they want. And maybe the franchise counselor might tell them, oh, maybe this is not a good franchise for you, but maybe we have another one that might work based on your skills.
Okay, no, that's great. One other approach I take is, well, you should work in the industry. So maybe get a part-time job doing it. Work in a restaurant, see what it's really like. Because when you look at something or you just see something, you really don't understand what it is or how to do it. But if you actually have a job there, and then you can learn on somebody else's dime. I always say you can either learn by planning and preparing, or you can learn by losing money. So that could save you from losing a whole bunch of money by learning on somebody else's dime and somebody else's business. So, definitely, or if you don't have enough money, that's a good place to go.
Yeah, no, that is completely true. I mean, it's always a good idea to get the skills. And what you're saying is something that, yes, it might take them a little bit to get the experience because they do need at least 2 years experience. And depending on the lender, they might require more. So,
right. But, but definitely, yeah, getting the experience, you want to know what you're doing. You're competing against people who do know what they're doing. So, how well are you going to do? So, yes, great points. So number 3 of the top 10 reasons your business may not deserve financing there may be credibility or character issues. What types of credibility and character issues have you seen, Myriam?
Oh, well, I think majority of people have credit issues. And
Mm-hmm.
that's because they don't know how to manage their money correctly. And maybe that's something that we're lacking from, like our system is lacking. There's no financial education at the school. You like need to learn how to manage credit, like sometimes the hard way or the no way. And I see a lot of people that come out of college and they're already in debt, and or back in the day they were able to have credit cards and you were 21 and you already have like $20,000 in credit card debt. I know that with I don't know if I'm allowed to say names, but when I was in banking, Obama put in place a lot of protections for people that apply for credit, and the students were not able to apply for credit cards, when they were at a young age. They put restrictions. So I see there were a lot of changes that benefit people of getting into financial trouble. So credit management is very important, and we need to learn how to establish good credit. Um, Unfortunately, credit tells a story.
Mm-hmm.
If you're not responsible on paying your bills, if you don't pay them on time, if you max out on your credit cards, then chances are that you have bad credit, and the bank is not going to see you as someone that is responsible on paying back the debt. So that itself will be a reason for them to decline the loan request.
Right, right. And also, when you're talking about character issues, your reputation. Um, you know, in small business, really, you are your brand, and it's all of you. And your brand is based on what people say about you when you're not there. So, what do people say about you not when you're not there? Is it good? Have you run into what sorts of things do you run into in terms of people's character, in terms of who they are?
Yeah. And for small business owners, sometimes they have the idea that yes, but my personal credit is one thing and my business credit is a completely different thing. I have a tax ID.
Mm-hmm.
Unfortunately, that's not the way it works. You're gonna be responsible of guaranteeing the credit card that you're applying for under your business, that business loan that you're obtaining and you're defaulting on. Everything is gonna go back to your personal credit report. And yet, your business, once they establish credit, they also gonna have a negative impacts on the credit score. So it is important that they understand that the business and the personal credit is going to be important, and any financial institution is always, 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 always going to review the credit, the personal credit score.
Okay, that's right. You can't just say, "Oh, well, my business credit. I'm going to work on my business credit score, and I'll be fine." That's not going to work. So yeah, so definitely that's a great point. So another reason is no reported income sustaining payments. Do you run into that? What does that look like, and why does that happen?
That would be an example of someone making $1 million in sales and reporting a loss of like $5,000-$6,000 or even more. That would be an example of someone making good income and reporting $20,000 in profit. Even for home purchases, you can you analyze what is left, and then you divide it by 12, and then exactly how much money is left to make a loan payment. And sometimes having those negative numbers shows that you don't have payment capacity. and that lack of payment capacity shows that you're not able to pay back the loan, so therefore you get declined. So, and I know that the financial system, the way that the small business owners get taxed, there's a lot of benefits that they have, and as far as like the write-offs and the reported net profit. But at the same time, if you're planning to grow your business, make sure that you are planning ahead and having those conversations with the CPA and tell them, like, listen, I'm probably going to need equipment this year, or my business is growing so much, I'm probably going to need to buy a warehouse, and I need to plan accordingly. That way, when they are ready to apply for a loan, they guarantee the chances of getting that loan approved. And sometimes it's also the banker that they're working with, because the bank, a lot of bankers might not have the knowledge, but if you get to the right person, they might be able to analyze your financials and give you like pinpoints of, this is what you need to do to qualify for a loan of that size. Maybe you need to, work on show this much to be able to qualify for your loan. So those are the things that you need to consider. And something that I always see when I analyze financials is the retained earnings on the company. They're always negative. So they take all the money that they make on the business. They don't left anything back. And that's also something that is going to affect them when they're obtaining financing.
Okay, cool. So you mentioned retained earnings. So that's really something that shows up on your balance sheet, one of your financial statements. And if you don't know the key 3 financial statements, you should learn that ASAP, which is the balance sheet, the income statement, and the cash flow statement, and understanding what's on them and what they say. So retained earnings is one of the key pieces of the balance sheet that bankers look at. But Myriam, can you just explain a little bit better what even is retained earnings?
For the money that is left at the end of the year, are you taking all the money into your personal account, or are you leaving anything on the business to reinvest in the business? That's, I guess, the easiest explanation.
Okay, so it's really, are you using any of the profits to finance your growth? Mm-hmm. You want somebody else to finance your growth, or so that's key. So go ahead.
And when when you talk about these 3 important documents for, from the financial point of view and from the banker underwriter point of view, there's a lot of keys that we use to understand, how the business is being managed. There's a lot of ratios that we calculate to see if your inventory is moving, if your business is solid, if you have leverage. There's a lot of ratios that we use to identify that. And when the underwriter analyzes those financials that you're providing, those are the things that they're looking at. And every industry is different. Like, not just I think every industry has a benchmark. However, you need to be around that benchmark. Business needs to be around that benchmark, because if you're not, then it shows that the business is not being managed the right way.
Yeah, no, that's important. Actually, last Saturday, I did a training for the Small Business Development Center on access to capital. And one of the parts of the training I call trading places, just like the Eddie Murphy movie. And really, if you were the lender or the banker, would you lend in these scenarios? And it's interesting how eye-opening it is, especially, if you ask, would you lend your money in those, or would you lend to them, and if they didn't pay you back, you lost your job, because that makes it more real. So definitely, understanding, like Myriam's saying, what they're going to do and what they're looking for makes a lot of sense. So cool. So, another thing sometimes you'll run into is unfiled tax returns. I don't know how crazy.
I didn't see that many, but I saw a lot of businesses during COVID that didn't have their tax returns done on a timely manner.
Okay.
And a lot of businesses wanted to apply for the emergency disaster loan, and they wanted to apply for the paycheck protection program, and they wanted to take advantage of all this money available to help small businesses, and they didn't have their financials in order. So that was something that I saw last year more than ever. And a lot of those people kind of were locked out or getting any type of help because they didn't file the tax returns. And eventually, even though that's going to cut to them, they're going to get into trouble, because, not paying your taxes is something very serious.
Right.
Interest, and there's all kind of penalties.
Yep. And they get you later, like they may not get you now, but that doesn't mean you've gotten away with it. I think the worst one I've seen was there was a business that hadn't filed in the last 5 years. Wow. So really working with them to recreate their financials and get their tax returns submitted. You had to do that before they could even apply for anything.
Yep.
And then I guess you worked with people on the PPP, both rounds, but I guess the first round was tough because a lot of people, especially small businesses, weren't eligible, at least for the, for it, for a couple of reasons. What type of reasons did you run into as far as that?
Well, before PPP this year's version, the Schedule C filers, it was based on the net profit, and all the net profits were negative to begin with, so they didn't qualify for any PPP money. And last year, obviously, there were completely different rules, and this year what was different is that a lot of people, kind of an advantage to small business owners, to self-employed people, but a disadvantage for small business owners, because they did file taxes and they did show a profit and they paid taxes, and they were not able to get PPP money, or at least very little PPP funds, where self-employed people were able to get sometimes a max of $20,000. So I know there were a lot of people that weren't happy with the changes, but it's self-employed people who got the benefit of obtaining PPP funds when the first round they were not able to obtain PPP funds. Right now, people are forgiveness is life for those people that got less than 150,000. There is an easy process, it may seem like, but I actually got a client today that the SBA sent them a letter, show me proof that you use the funds correctly. So they are doing audits. Believe it or not, I guess, I don't think a $3,000 loan is going to trigger an audit, but they did an audit on a $3,000 PPP loan. They wanted to see proof of what they use the money for. So that tells you, like they might be doing on a case-to-case basis, but they are pulling those loans to make sure that the people use the funds the way they were supposed to use them.
Yep. Yeah. And like the PPP first round, one of the biggest things, like you mentioned, is they didn't have any income. But the scary part is they didn't know they didn't have any income on their tax return.
Oh, yeah.
So, one thing as a business owner, you need to know what's on your tax returns. And, you can't leave that to just your accountant or bookkeeper, because they view their job many times as setting it up so you pay the least taxes or no taxes. But if you're going for financing, if you don't pay any taxes and you don't show any income, that means you don't have any money to be able to pay a loan back. So, yeah, so that's cool.
Yeah, and I gotta say, I work with a lot of accountants and CPAs, and they're referring clients to me for, lending, and for PPP. They have sent their clients to me because they were in the middle of tax season to begin with. So majority of these clients, the CPAs that I work with, they do have a conversation with the clients, if it's the monthly basis or the quarterly basis, and then let them know where they are. There are accountants that unfortunately don't have the communication with their clients, that their clients don't know how much the money they're making, if they're losing money, if they're making money. They only know that at the end of the year they might have to pay taxes or might not have to pay taxes. And when they're applying for financing, they're like, oh, my accountant didn't do it the right way. But that's also, that's your business. You're the one that needs to stay on top of your numbers. You need to know what's going on with your business.
Yeah, just like, if you go to a tax prep place. So, keeping in touch. So now, another thing that you may run into is an unsustainable business model. What is that? What does it look like? And how do you fix it?
I know that for the many times that I was at the NJSBDC's access to capital panels, I noticed that there were a lot of people that have ideas, but then when you start having a conversation about their product, there was really not a market for it. And those are the things that you need to work on doing your market research and knowing whether your business, the services and the product that you're creating is actually going to cover a need, and if people are actually going to be paying for the service or buying your products. Otherwise, you really don't have, you might have an idea, but you're not going to have a market for it.
Yeah, so definitely, the market is key. And then also just some business models can't work because even if they sold a lot, the dynamics of their business might not allow them to make any money. And I'm sure you've seen that as well.
Yes, I think the franchise have a model that is a proven model, and you always want to start creating a model for your business as well, because in my case, I am a solo business owner. I do have a person that helps me every now and then, depending on how busy I get. I would love to have someone that helps me full time, and that's my goal for next year. However, I start documenting what I do and creating policies and procedures, something that it was given to me when I was back in my corporate days. But nowadays, anything that I do that I know that someone else can do, like completing applications, for example, like I start making notes. This is the information you need to do. This is where you find it on the tax returns. I start creating those procedures so someone else is going to be able to use the skills and help you establishing the business model and transferring your skills and your knowledge to the other person, so that way you can grow the right way, not to the point where you're the only person running the business and you grow and you're working in the business and not on your business. So I think for any small business owner, it's very hard in the beginning, but as you grow, as long as you have a structure in place, you can, become a monster. And I mean, I don't know what everybody's goal is, but for some people, they want to have a big business. For some others, we just want to have something that we can maintain and we want to be able to share a passion with other people and maybe have a small team of people that work with us. But it depends on your dream. And as much as if you're looking to grow your business, start creating those models for the growth. Because you can be selling if you don't have the right procedure or the right model, then at some point the business is going to fall apart.
Right.
And I'm sure you probably see a lot of that.
Mm-hmm. And there's a old joke. They say, if you don't have a good business model, generally that means your costs exceed your revenue, or your variables. So, they say we can make it up in sales, but what happens is every time you sell another thing, you lose more money. So understanding what your costs are is key. So what we're going to do is we're going to take a quick break, and then we're going to come back and talk to Myriam about, I think we want to go into more depth on the financial statements and what they are and why they're important to you as a business owner and why you should understand them, because that's key and for key things that you need to know. But before we do that, we're just going to have a quick video about the Power Breakfast that I have run. We've taken a break for the last couple of years, but we plan to start back October 29th, COVID permitting. And, it's a great way to connect, learn, develop relationships. And as a result of previous ones, we've had millions of dollars in financing and economic impact. So definitely look out for more info about the Power Breakfast, October 29th. But if you've never been, be good to see a little bit about what really is the Power Breakfast. So I'm going to show a quick video, and then we'll be back with Myriam in a minute. My name is Andrew Frazier from A&J Management. One of the things we're here to do is supercharge your day. Yeah. What we do as part of our business, as an outgrowth of our business, is we have a series of brain trust initiatives that we're continuing to build on. And really through the brain trust initiatives, what we're doing is we're bringing a higher level of intellectual capital to bear. So we're bringing in resources, experts, expertise from across the country to share best practices and connect with business owners, entrepreneurs, organizational leaders to help you be more effective in what you do.
What I'm learning from Power Breakfast that sets it apart from other networking opportunities is how my local activities integrate and are part of the larger business community.
It brings together people of all industries who can share all different levels of expertise and can educate each other on different changing nature and evolving regulatory legal landscape, as well as all facets of all industries that they might not otherwise be privy to.
The Power Breakfast is so important for the entrepreneurial community because it gives the various business people who come together an opportunity to interact, discover what it is they can do to help each other and also do some business.
From a corporate perspective, Marcia McLennan, and or for that matter, Andrew and his business model, his branding, none of us can succeed individually. We need partnership. Collaboration is the new norm.
Since 2011, the Power Breakfast has been held in the northern New Jersey area, but over the next couple of years, we expect to expand into Pennsylvania and New York as well.
Welcome back to Leadership Live at 8:05, Talking Small Business. I'm here with Myriam Cruz, and we're chatting about key things that you as an entrepreneur should know in terms of financing and financial management to run your business more effectively and be able to get access to capital. We covered a lot of things, but one thing that we talked a little bit about, want to go into even more, is financial statements. That's one thing I found that many business owners might be afraid of, don't know about, don't understand, but they need to. Myriam, why is that, and what are they?
So the three financial statements that are key for any business owners are the ones that you mentioned before: the balance sheet, the income statement, and the cash flow statement. Balance sheet is a financial snapshot of your business. It gives you an idea on how much you have in assets, how much in liabilities, and what will be your net worth. For us as bankers, and I still call myself a banker because that's my financial background. It gives us a good idea on your leverage. If your business is doing well, how strong your business is. So it is an important document, and you should be reviewing. It's going to give you a good idea of how your business is doing. As far as the income statement or the profit and loss, that gives you an idea on how much money you're generating, your gross income. Another important information you have there is your cost of goods sold, like how much money is costing you to produce the income that you're producing, and then all your expenses. That includes your rent, your utilities, your payroll, and anything that it takes you to run your business. And then lastly, your profit or your losses. That's another important document that we review. As far as the lending, we are always looking to see how your business is trending from one year to another year. Very important for us when we're doing your financial analysis. And the last but not least is the cash flow statement that shows the net change in cash, in the inflows and the outflows and three areas that will be the operating, the financing, and the investment income for your business. That's another important document. We don't use it in financial analysis. However, it's important as a business owners to you analyze that cash flow statement. And I know a lot of business owners are reviewing their cash flow statement on the weekly basis, on the monthly basis, as frequently as you need. But that's another important information that you as a business owners will help you to make financial decisions for your business.
Okay, great. So, we talked about all three. Which one is most important and why?
For me, there's two that are important. The income statement or the profit and loss, because it gives you an idea of how much money you're making and how much money your net profit is. And then your balance sheet, because you want to see if you are, a solid business. Like I said, it gives you a good idea when you compare your assets versus your liabilities. It shows your liquidity, how quickly you can turn your assets into cash. And there's that for me, those two reports are the most important when you're analyzing financials for a business.
Excellent. So now, one thing is accounting tends to be more today going back in time, whereas finance tends to be more today going forward in time. And, definitely a lot of business owners look at the past, but financial information can also be used to help you with your future. And can you talk a little bit about, what that means and a little bit about how you can use your financials to not only understand what has happened, but to better plan for what's going to happen?
So as far as this financial information, I would say they're very fundamental for any business owners to know how to read them, to understand what's going on between one month to the other, how your sales are doing, comparing from like January to February. What are your busiest months of the year? What is going to be your earnings? What are you spending? Are you overspending? Is there anything that you can cut? And sometimes you can also identify that there must be mismanagement on the way someone is or yourself is managing your business. Or sometimes even with what happened on the construction industry. Let's be clear. I'll give you a clear example. For example, lumber prices increase and construction prices increase. So if you don't analyze how much it costs you to produce that piece of furniture that you were producing, or and what is now your net profit, you might be working on a loss. So you need to make sure that you identify those financial issues before they get out of hand. And as far as the balance sheet, like I said, you want to know how much liquidity your business have. You want to know whether you over leverage, you have more debt than what you have on you as an asset, because that shows that you might be experiencing a financial issue and that you might need to address it right away. And there's also some financial ratios that you can use. Obviously, that's something for more advanced business owners that want to stay on top of what's really going on in the business. But knowing the financials and how to read, stay on top of your numbers is very important. That way you can take your business to the level you want to take them.
Thanks, Myriam, for sharing. Sorry about that. It's amazing how fast the hour goes. And, but before we close out, we'll always like to have the guest really share some key takeaways that, we talked about a lot of stuff. What are a couple of key things that you should take away from this that you can implement within your business immediately? So we'll take a second just to, check out a quick video, and then we'll be back. And Myriam can tell us a little bit about what key things she thinks we should be taking away from this experience. So here's a chance to learn a little bit about the Masterpreneur Club.
Is your business growing, and are you making enough money? If not, you need to join the Masterpreneur Club. The Masterpreneur Club is a community of business owners like you who are focused on growth and making more money. They follow the Masterpreneur Playbook developed by Andrew Frazier, Business Growth Pro and CFO, a proven 5-step business growth plan for creating a sustainable enterprise that can run without you. What exactly is the Masterpreneur Club, and why should I join? The Masterpreneur Club is a membership component of the Small Business Pro University that features the opportunity to experience valuable multimedia mini courses and training opportunities, participate in virtual roundtable, group coaching, and knowledge-sharing discussions, access to a powerful network of experienced entrepreneurs, business owners, and thought leaders. We are committed to your success and want to make it affordable to any business owner seeking to accelerate their growth. Don't hesitate. Visit www.masterpreneurclub.com to join the Masterpreneur Club right now.
Okay, again, we're back with Myriam Cruz. We're talking about financing and business finances and making them a little bit easier for you as a business owner, because it's key if you ever want to access capital, but even more importantly, if you want to grow your business and be more profitable. So, Myriam, what are the key things that people should take away from our conversation that they could put to work immediately within their business?
Number one would be keep your financials in order. Number two, stay on top of your credit. Know what your credit score is. Know that your credit score is telling a story, and make sure that that story that you're telling with your credit is a good story, as far as your repayment history, as far as the balances that you keep. Make sure that you start preparing if you really want to access to any type of financing. In general, they always going to be looking at your credit. So we said, stay on top of your finances, check your credit score. Start having those conversations and building those relationships with your bankers, with your financial consultants, with your business consultant. There's a lot of resources that you have access to through the Small Business Administration. They have centers where you can access to a counselor for free. They have a SCORE. They have the New Jersey Small Business Development Center, which I am one of the counselors for, access to capital. You need to start preparing your documentation, have that conversation with your CPA, and start knowing exactly how much money you need. Like, do your homework. Make sure you show that you are prepared, that you know how much you need, and do you have everything organized. So the minute that you are applying for the loan, you have more chances to be successful and obtain the financing you need.
Hey, great. You heard it from Myriam. It's great information. Myriam's an expert on business financing in terms of lending and helping business owners be more successful financially. So, Myriam, thank you so much for taking the time out of your busy schedule to join us this evening and share your expertise with small business owners. So, thank you again, and look forward to having you on again in the future and seeing you continue to do great things for entrepreneurs throughout New Jersey.
Andrew, thank you so much for the invitation. It's my pleasure to be on the show. I thought that an hour was going to be a long time, but it went flying. And I appreciate that you are doing this for business owners, because you're giving them information, and that's what they need so they can make the right decisions. Thank you so much.
Great. Thank you as well. And we'll have you on again. So thanks again, Myriam. Thank you for the audience for tuning in. Another great show on some great information for business owners. Each week we try to cover different topics and different things that you as a business owner could benefit. So just as a preview for next week, we're actually going to be talking about leadership. The topic's going to be leadership strategies to advance your business. And the gentleman who's going to join us is, I've actually got my brother, Evan, who's going to join us. He's president and CEO of the Advanced Leadership Institute. And really, we're going to talk about, what it takes to be a business leader, to lead your business successfully. And, it should be a great conversation. He's younger, so I taught him everything he knows. But definitely, found it, definitely he should be a good, great guest. We'll cover some valuable stuff, and looking forward to next week. Thanks again, Karen, Stephen, John, Timothy, and others who have joined us this evening, and look forward to catching you next week. And at the end of the day, you got to keep in mind that in business, the more you know, the faster you grow. Take care, and I'll see you next weekend.
Thank you for listening to Leadership Live at 8:05, Talking Small Business. Subscribe to our YouTube channel and to the podcast on your favorite podcast platform. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbpro.u.com.